Hi everyone, my name is Carlos Wyden from carloswyden.com. Now, I'd like to share this, short presentation that I think is very valuable for everybody. The consumer economy and rich dad, poor dad. Okay. Now, what the wealthy teach their kids about money that the poor and the middle class do not. So let's jump straight into it. We live in a consumer economy, okay, which continues to grow throughout continuous consumption. Most of us define ourselves in terms of how much and what we consume, our role in making of what we consume, our ability to persuade others to consume. Okay, and its philosophy is spreading throughout the world. Is it truly satisfying? If your reason for becoming rich is to look rich, you will never become rich, period. The consumer economy, we are a free country, not necessarily a fair country. So we are all free to fail. Okay, at school, we're being taught to be good employees. We go to school, get good grades, get a good job, work hard, maintain credit, so that we can consume lots of stuff. The job for most means just over broke. Should we be taught how to become wealthy instead? Most of us following ideas about money and wealth creation are from Robert Kiyosaki and his partners, Sharon Lecter, for example. I highly personally recommend that you should study the writings in detail and and really embed them and create your own manifestation upon them. Now let's talk about financial intelligence. It is not your boss's job to make you wealthy or secure. It's their job to give you a paycheck, nothing more. Making money will not solve your problem if money management is your problem. And that happens a lot. So money there is like a drug. Money pushes you around. Will you obey money? For example, employers and bosses, do they push you around? Landlords, do they collect money from you all the time? Bill collectors, tax collector, family and friends? Perhaps you can push back. Are you smarter than money? Answer. Do you work for money or does money work for you? When money works for you, every dollar is an employee. Each dollar works to bring you even more dollars while you're sleeping. Passive income, interest, dividends, real estate income, royalties, residual incomes, annuities. Your money can work for you, or it most certainly will work for someone else. What do you do versus what do you own? The key is, what investments do you own that will bring you passive income? Being rich versus being wealthy. Being rich is all about how much money you possess in a specific moment in time. Being wealthy is about how much money you keep, how hard it works for you, how much is left for future generations. Who knows what to do with it? Being wealthy is about exploding your passive income. How long you can survive without ever having to go to work. Know the difference between an asset and a liability, and only buy assets. A true asset gives a positive cash flow each and every month. Live below your means while consistently increasing your means. Make your passive income cover your lifestyle expenses forever. Sadly, most of us have been taught to read words and books, but not numbers and financial statements. Two key personal and business financial statements we all must be able to read are as follows. The income statement shows the amount of money coming in and going out. The balance sheet shows the balance of what you own and what you owe. An example, here we have a financial statement, income statement. Income, paychecks, dividends, interest, rents, royalties, profits, advances. Expenses are payments, taxes, mortgages, rent, cards, car, food, fun, rent, clothes, childcare, insurance, medical, etc. Liabilities are debts, mortgage, car loans, credit cards, school loans, etc. And assets are things you own: stock, bonds, notes, real estate, business, intellectual property, silver, etc. Now, an income statement, you know, they have the small income and the poor live this way. They basically don't educate themselves with the balance sheets. They don't have any assets and they don't have liabilities. Um, so their income comes in and it goes straight out their expense column. Why? Because they buy stuff. Now, stuff means inexpensive things that they don't need to survive. And that's basically things mostly created by the wealthy. So the income comes in, it goes out the expense column, and they never really educate themselves on the balance sheets, assets, and liabilities. Now, the middle class they buy expenses and liabilities, and they think that those are assets. So income comes in, it goes through their expense column directly to liabilities. For example, they buy a house thinking that that's their asset and they live in that house and that's going to cost them money, so it goes out the expense column. And they buy a car because they think that buying a car is also an asset and it's something that they own and it's valuable, which in a way they're wrong because they actually it consumes money from them. So they're buying nice things. It could be a yacht, it could be an expensive trip, when they go on holiday, all these kinds of stuff. They basically earn a lot of money in many cases. They have a high paying job in some cases, but they have high expenses and high liabilities, which in return goes back to the wealthy again, because the wealthy are the ones who actually provide these things for them. Now, what the wealthy do is they take the income of the poor and the middle class and buy assets that produce more income. I'll give you an example. Their income comes in, and instead of going out the expense column and into liabilities, it goes actually into expenses, because they do also have expenses like everybody else. They have to eat, they have to live, and they have to travel. However, instead of going out buying a new car or a nice watch or a nice trip, they actually invested into the asset columns. Now remember, assets are things that produce money for you. So that asset then produces more income. It could be a business, for example, and it goes into their income statement. So it's a circle that keeps on growing.